Snapchat's biggest hurdle, Facebook. You probably have used Facebook if you have used YouTube, and you have most likely went from MySpace to Facebook. You probably also have gone on Facebook today. If not Facebook, what about Instagram? So Facebook is absolutely a dominant force in social media right now, and it has been for a long while. Also, it is a dominant force in advertising. And Facebook is growing larger with higher average revenue per user, growing 27% year over year. Why did I just mention ARPU? So it's almost a direct measure of how valuable a user is when monetized through Facebook's primary source of revenue, advertising. So that's the true beauty that I found in Facebook. Their primary revenue stream is in advertising, and advertising carries very high profit margins. Now, to put into perspective, the cost of revenue was only 14% of the total revenue for Q1. In total, they have more than 60% profit before research and development is paid out. One of the best metrics I actually pulled off this Gray report was that the number of ads delivered this quarter increased by 32%. So this was hard to find. It's in the haystack of all the information in quarterly reports, but you have to look at these things if you're going to invest. And, for this reason, I think that work is directly correlated to the profit that you make. Because if you work on reading everything you can about a company, you're going to know exactly what you're getting into, and you're either going to be very confident or not confident at all. In total, the net income for Q1 doubled when compared to the Q1 2016 report. And like I said, Facebook is a dominant force. If they're so dominant, who's standing in their way? Literally no one. They are Pac-Man eating startups while having the bigger social media businesses ghost chase them. Then Facebook grabs the bigger pixel, turns around, and gobbles the social media company up. But apparently Snapchat was just a ghost too big to chew. So, their competition really is Adblocker and is not doing much. But in their quarterly report, they do have a section on competition. And the only company they actually name is Google for their social media integration. So, clearly, if they had a true threat, they would be almost required to name them in their risk factors section. They don't. Mix this in with the steep growth that they have, and there's a prime recipe for profit I see here. So what's need to know if we were to hop in bed with Facebook? And by this I mean buy like 10 shares. They have some bed bugs. They do mention also in their competition section, quoting them on this, we believe that some of our users, particularly our younger users, are aware of and actively engaging with other products and services similar to or as a substitute for Facebook products and services. So this means Snapchat. All the younger generation is cheating on Facebook with Snapchat. But like I said earlier, no one is on Facebook's tail. Now, they must have something wrong, like massive amounts of debt, right? And nope. Their liabilities for Q1 were about 10% of their total assets, and they created an entire section titled long-term debt. They put in 3 measly sentences in the paragraph showing off their $2 billion revolving credit line of debt. Let's keep in mind they're a $440 billion company. So right now, the only thing that slows Facebook down is advertising platform competitors and ad block. All right, is Facebook a buy? Yes. I'll tell you how. They have growth. Their PE is following. It's going to be around 23 forward PE. The revenue is growing massively. They have the revenue and the earnings to back up their growth, and they don't face destructive competition. Back to the Pac-Man analogy, the only thing in Facebook's way is level 256 when Pac-Man runs out of memory. So that was the video. I hope you liked it. Make sure you hit the like button. I actually wrote this script out. Lately, I've actually been writing outlines, but this time I wrote every word for word. And also comment with any suggestions you have to make these videos better.